Thank you so much for your patience. We are ready to begin our final session. As I mentioned, we will be bringing together experts from traditional banking and the more disruptive side of the market to talk about how traditional banking can adapt, what the future holds for the City of London, and how Arab countries can follow the lead of places like Bahrain, which are becoming regional hubs in the fintech industry. I'd like to turn to our chair for this session, Mr. Manaf Alhajeri, who's CEO of Markaz, the Kuwait Financial Center, who will be leading this discussion. Mr. Hajri, tfaddal.
Welcome to the Banking and Finance, Fintech and Blockchain session. Definitely, we had a long day, but we also were fortunate enough to have in the previous session a panel full of youth and energy, so it was kind of rejuvenating for every one of us. I personally was extremely stimulated by the discussions in the previous sessions. I must also express my admiration to the perseverance of everyone here for having stayed that long and with being so interactive until this hour of the day. Amazing stamina. So you don't have to stand up like my previous chair asked you to do. I think we'll just start with the subject. Definitely this session to me is the culmination of everything that was discussed earlier on. As in finance and the economy, you kind of combine all the issues together. We must not forget that this is about a post-Brexit UK, a UK that is not only very well known for its strong tradition of innovation, but also for reaching out in a re-energized way to the Arab world with different methods and ideas. For the Arab world, it is an interesting period as well. It's a period of transformation, many unmet needs, many issues are articulated. We'll try to come to that. One of the things that I admired earlier on today is that many of the speakers, and not only the Arab speakers, but some people, some voices from the international consultancy are showing more and more interest in transcending the logic of trade to that of partnership. So we heard many times about the sustainable development goals. People do not want to invest in anything that has nothing to do with the immediate needs of the Arab population. I personally find this very promising. I've heard voices from the floor on the need to diversify away from concentrated sectors and eliminate all the anomalies in our economy. A gentleman mentioned something about the need to attract the attention of the UK firms to invest in sectors, economic sectors beyond the oil sector. And I must amplify this request because I think it's extremely demanded and needed. So this panel is about innovation, fintech, the financial sector. Innovation is undoubtedly a very important topic for two reasons. For the financial sector, which is a highly regulated sector, innovation can be challenging. Innovation and stronger regulation may not always go hand in hand. The second reason is that our region is known to be in a dire need for in everything that has to do with the knowledge economy, and innovation is part of this debate. So I want to transcend, I'm hoping that in our panel we will transcend the logic of innovation and remember a little bit what our industry is all about. This is the financial services industry. This is an industry that is about intermediation. It's about linking investors and depositors with entrepreneurs and investment ideas, good investment ideas. And we have to be mindful of that. In our panel, I'm happy that we have a cross-section that probably represents all the profiles or the industries that count. We have a central governor, we have a banker, we have an entrepreneur, and we have an international consultant. If there is one profile missing from this panel, I think it would have been the Arab venture capital industry. I think this is a class of investors that we're witnessing, whose birth we're witnessing now. They are announcing new trends, new ideas, and I have to say that they are more attuned with the issues of the youth in the region, probably more so than the international VC industry, which hasn't been looking at this side of the equation. So we want to hear about emerging trends, and we want to hear from our esteemed panelists on what's happening based on their respective experiences. I want to start with Ms. Shaikha Al-Bahar. Ms. Shaikha Al-Bahar is the Deputy Group Chief Executive Officer of MBK, one of the leading Arab banks, of course, and she herself has an extensive experience in institutional financing, including privatization, project finance, bond issues, BOT financing, IPOs, GDRs, and many private placements. So the attention will shift to you, Shaikha. I would love to hear about what you have to say. Thank you.
Good afternoon, and thank you for the kind introduction. It's a pleasure to join you here today to discuss how the banking sector can collaborate to promote, support, and accelerate technological integration in the financial industry. Financial technology is now a cornerstone of modern banking infrastructure and vital in remaining competitive and customer-centric, ensuring retention and engagement in the current disruptive environment. Financial institutions must quickly adapt to rapidly changing world and, in our view, embrace fintech as an opportunity to thrive rather than tools to compete and survive. Adapting and impacting the fintech, it's a process. It's not as simple as that. We keep saying fintech, blockchain, and so on. So how to do it? I mean, it's a process. Making a bank competitive in the current environment requires informed decision-making on technological and deep understanding of the forces at work. In broad terms, and if we use MBK as an example, we have identified three main areas of focus: the threat and disruption of technological innovation, the faster pace of change in product and services enabled through fintech, and number three, facilitating customer engagement through digital banking services. Countries and institutions looking to adopt financial technology must understand their operating environment and implement technologies accordingly. If we take our GCC region as an example, demographic considerations are vital in providing relevant technologies and solutions. In Kuwait, for instance, 63% of population below the age of 30. This population also enjoys one of the highest internet and mobile penetration rate in the world. In such economies, advanced online and mobile banking is not a luxury. It's an integral part of the online financial ecosystem. Who doesn't have, mobile banking now, and who doesn't manage his account through mobile banking? I believe all of us, nobody now goes to the branch to manage his account. We use not just the iPad, the mobile. Mobile is first. This is the strategy of most banks. For a while, there has been a growing consensus, especially in MENA, that banks must adapt or else they will disappear and not survive, or as we say, they will, dinosaur. Our philosophy is in the opposite in MBK. We do not view technology as a threat to traditional banking services, but a fluid enabler to solution for our clients to better service and to come up with innovative products. With fintech and blockchain comes the exciting opportunity to build and thrive. We must remain vigilant and proactive as we enter uncharted technological territory rather than defending outdated mechanisms. As you know, technology change is exponential. So we have to be up to date. We have to invest hugely in technology. Otherwise, as I said, we will be dinosauring. That being said, there is a significant room for improvement. Much current infrastructure is outdated, and we will not transform overnight. It is important for institutions to reorganize and recognize the such gaps and to anticipate such gaps. Partnership with non-banks, fintech players are an emerging trend worldwide that strengthen banking architecture, while true internal integration can occur. This takes many forms, such as core IT upgrades to improve bandwidth, and ranges to cybersecurity, resilience to combat rising online threats. As you know, now cyber attack is one of our main challenges. Competition brings with it the need for innovation. Our aim is for new initiatives to give us an edge against our peers. We have invested in our consumer platforms to provide better service experiences for customers, with new options such as selfie pay, biometric cards, and smartphone, selfie identification, and fingerprint. We recently implemented a new mobile banking platform for Egypt, Iraq, Bahrain, Jordan, and UAE, which ensures seamless banking transactions. On top of this, our joining of SWIFT GPI and Ripple networks to ensure real-time international remittances across geographies. Bolstering our global transaction offering also demonstrate how leveraging in new technologies can create a remarkable customer experience, but on reliability and convenience. Create an infrastructure for enabling fintech. We have to come up with certain infrastructures to make sure that we are on the level of best practices. The future success of banking lies in the hands of technology. Banks must compete and commit significant investment into building state-of-the-art infrastructure if they wish to keep pace with the sector's accelerating trajectory. Some analysts go even beyond that. They predict that IT investment should be as much as 10% of revenues. And when I talk to my chairman, I always tell him, if we want to lead, if we want to be the most innovative bank in the country and in the region, we have to agree on a percentage of the bottom line to invest in technology. For new concepts and ideas to be tested, banks should participate in this process to incubate and nurture programs, including likes of fintech Hive in Dubai, fintech Saudi in Kingdom of Saudi Arabia, and fintech Bay in Bahrain. Similarly, in Kuwait, the central bank has recently issued a regulatory sandbox framework for fintechs. We have no doubt that the appetite for partnership among the large banks will propel operation and service offerings into the digital age. This focus, however, should not be limited to domestic partners and startups. Regulatory infrastructure must welcome both homegrown and overseas fintech players to stimulate growth drivers across markets. Innovation is key growth driver, catering to a young and tech-savvy population. Younger customers will become early adopters for the technology, such as artificial intelligence and robotics, and will be adequately rewarded for doing so. It is in banks' best interest to foster such relationship with key stakeholders. Opportunities for investment in the Arab world fintech industry. And this is, a message to international investors and companies to, just have a serious target to invest in the region. There exists a wealth of opportunities for investment in the Arab fintech industry. It is remarkable to witness the progress that has been made and its implications for the industry. Powerful and relevant players are emerging, especially when it comes to payments and transactions. The recent London IPO, as mentioned by the honorary London Mayor of Interwork International, it's a UAE-based business, is a testament to the fact of merging with internationals. And similarly, we also at MBK had our own experience investing in smart wealth through our investment banking arm. MBK Capital Smart Wealth, it's a service end-to-end, fully digitized, and the purpose is basically to attract the youth and to leverage on, digitization and the appetite of customers in the technology. And the platform is well positioned to grow our wealth management business. This is not to say that large banks should be competing in any arms race for fintech partners. It has to be studied. It has to be within a strategy and not to invest haphazard with fintech players or investors.
I'm afraid I'm going to ask you to wrap up in 1 minute, please.
Sorry?
Can you wrap up in 1 minute, please?
Okay, whatever you want. In conclusion, and I'll make it a small conclusion. Today, as we know, many banks in the MENA region and beyond are adopting new and exciting platforms in the wake of fintech growing hold in the industry, in the banking industry. Shifting customers' needs and demographic changes reminds us that we must continue to do the best that we can in investing in technology. Once again, I would like to thank the Arab British Chamber of Commerce for hosting us here today, and I look forward to contribute in any questions during the discussion session. Thank you so much.
Thank you very much. A very confident message, and it does concur with what I hear from my banker friends in the Gulf, that the impact of fintech is that of a transformation rather than disruption. I will now move to His Excellency Mr. Azzam Shawwa, Mr. Shawwa is the governor of the Palestine Monetary Authority, and he has also served as a member of the board of directors of the Palestine Investment Fund, PIF, and Palestine Sovereign Wealth Fund and Investment Fund. So, Mr. Shawwa, the floor is yours.
Good afternoon. Royal Highness, Excellencies, distinguished participants, colleagues, and friends, today this has been a very important day. I know to this conference, also to Palestine in particular. Before I start, I would like just to make an announcement just about a lot of the speakers were talking about the fintech and the AML and CFT and the regulations and the central banks. And just 30 minutes ago, we had a long, actually it was a long 3 months, I would say, but at least the last 3 days, it was a long battle for Palestine, for its FFU, which is the Financial Follow-up Unit, and it's becoming a fully pledged member of the Egmont Group, which is the body that has all the units of the world, meaning this will be more credibility for Palestine financial sector, and also it'll be more comfort more the investors who would like to come in Palestine. So I will say this. Really, it's a very honorable thing, and to be with this distinguished guest and to hear the official news coming from Netherlands, where the conference or the meeting was for our membership. Thank you very much. And again, thank you for this opportunity to be in front of this distinguished guest, because one of the important reasons of maybe attending today is, of course, because I received the invitation, but also one of it is just to show what we are doing in Palestine. I was chosen to talk about fintech, and in the MENA and in Palestine, which is I think this is very important, and it's be very effective to do so. Under all the circumstances that we are facing through in Palestine, either politically or financially, but we remain always look for tomorrow. We have the Palestinian resilient, as they call us, and our plan and our agenda normally, it's not a long term, it's a short term, and it's amended on a daily basis. But nevertheless, we have a very strong and stable banking and financial system. And now talking about fintechs, I know this is, it's a very, we're in a country where it's the hub, I think, of the fintech of the world. We've been to London several times and several trips to see the central bank and the sisters company and the hubs that are working on fintech. So we learn a lot. And that's, I think, very important for the banking industry. Ladies and gentlemen, financial technology, the fintech, is a very new field that affects or attracts emerging businesses who seeks to make profits and bring about transformation, change in financial services sector that has so resisted changes for many years. We have seen the fintech led transformation in all sectors in our industry, including payments, digital currencies, money transfers, risk management, and even insurance. These businesses have become maintaining a major role and players in the global market, including the MENA. However, their success requires a number of steps, such as strong technological and digital infrastructure, a large number of electronic consumers. Also, it requires having a financial sector that encourages innovations and financial stimulations. Also, a strong culture of risk management, compliance, and fair treatment of the customers. Ladies and gentlemen, the Arab world is evolving, and It's evolving, and digital transformation is becoming part of the culture development. Thereof, fintech is knocking on our doors. The Arab world was the major hub of the 105 emerging businesses in 2015, converting 12 countries, spreading across the countries of the GCC and the MENA. 4 out of the 12 countries that host fintech emerging businesses in the MENA, including the United Emirates, Egypt, Jordan, and Lebanon. And hopefully soon Palestine will be included. These 4 countries are the potential centers for fintech in the MENA. The host countries have an advanced digital transformation and infrastructure for these emerging companies. The host environment in the MENA region is still new compared to the rest of the world. Dear friends, please let me allow to explain how the development has affected banking industry. The many economic analysis anticipated major shift in the traditional international financing, which would eventually affect banks, which now have a competitor that is not to be underestimated, especially when considering the threat posed by big tech companies like Facebook, Google, and Amazon. People are usually faithful to the old way and the traditional way of assuring, because of banks could always mostly continue to remain in the control over the financial sector as usual, especially in the long run. However, individual consumers' behavior changes all the time, and banking sectors, they should follow the behavior to where they can maintain a profit and effective margin, and in worst case, put some banks out of business. Banks are important to the economy. They are subject to the high supervision and issuing credits and credit cards and credit risk. They are largest payment gateway in the world. However, things are changing. Nowadays, smartphones everywhere are likely to reduce banks' monopoly, if I want to use monopoly, over physical infrastructure and distribution networks. Fintech development is steadily growing in the MENA, and it stressed a number of opportunities. 86% of adults don't have bank accounts. Lending to SME business are half of the world average. 4-fold increases in e-commerce over the past 5 years. 1 in every 2 clients is interested in new digital services. On the other hand, there are several obstacles that the industry faces, such as banks' fake creativity while emerging fintech. Bank clients lack enough knowledge and understanding of the emerging fintech market. Security plays an important role in preparing banks for payments and receiving process. Fraudulent concerns make unsatisfied banks inclining to their loyalty to their banks. Lack of vibrant that support the encourage of the emergence of the fintech led players who are bringing about environment and about economic and social benefits, and such as financial inclusion. The questions that comes to everybody's mind is, what's the impact of fintech on the emerging market and how we can overcome? We need to tackle the below issues: policies and laws, human capital, which is including availability of skills workers, entrepreneurship, innovation, and solutions. In conclusion, I will go directly to Palestine. The PMA, which is the Palestine Monetary Authority, represents the Palestine Central Banks, has adopted strategy to transformation of Palestine into a technological and digital world, from relying on traditional cash methods in transaction to electronic transactions. We also aim to improve the financial service delivery to Palestinian society by implementing the National Financial Inclusion Strategy in Palestine, an existing project dear to my heart. And Palestine is the second country of the MENA who really the strategy is ready, and we are working there. We are working on a way to overcome some challenges, such as lack of the Palestinian national currency, which all of you know that we are still using other currency, which is what the Palestine adopted after Oslo. It's 4 currencies. It's the US dollar, it's the euro, it's the Jordanian dinar, and the shekel. With lack of independence and the actual borders under Palestinian control restricted movement of capital, goods, and individuals. These factors are under no doubt it's detrimental to the Palestinian economy and acquire attention. Despite the challenges, PMAs, together with relevant stakeholders, have properly adopted and implemented policies, means, and tools to limit the use of cash transactions and encourage a shift towards using modern electronic payments methods. PMA also began using immediate settlements, and we do have a four currencies settlement on a daily basis, and a retail payments system and national switch system. Also, the national switch system works on four payments, which establish an infrastructure that links all ATMs with the 3 currencies in each ATM. That's a requirement to facilitate people's access to banking services without having to go to the bank of the client. We are in the process of launching the electronic clearance system. Also, we have started authorizing electronic payments companies so they can start issuing services and to provide the smartphones with all different services that most of you are aware of. We are working on an experimental environment sandbox in cooperation with relevant parties and qualifying fintech companies that meet our criteria. Before I end, I would like to thank you for listening, and also I would like to thank very much the Arab British Commerce for this nice and for this excellent and gathering, and I wish this conference the best of luck, and thank you again for listening.
Thank you, Your Excellency. So, unlike the stereotype image of the past, central banks, Arab central banks, most of them are showing a lot of entrepreneurial spirit in embracing fintech and the related facets of it. As you mentioned, sandboxes is something, sandbox programs is something that is being adopted in most central banks. Other central banks stand out in more exotic programs. I know that the UAE and Bahrain, for instance, are embracing cryptocurrency and crowd financing. They're issuing regulations on that. I know that the Banque du Liban is partnering with VCs to come up with programs for SMEs as well in fintech and other issues. So very promising indeed. I will move now to the disruptive side of the session by allowing Mr. Dotun Rominiyi to talk. Mr. Rominiyi is a blockchain architect, emerging technologies, London Stock Exchange. He has a background as an expert technologist and software engineer. In the past 3 years, he involved in blockchain technology at multiple levels: development, architecture, product design, and strategy. But you have to explain what blockchain means in the first place. Go ahead, please. Thank you.
Okay, thank you. Thank you all very much for being here today, and thank you for listening. So I'm going to focus a little bit around kind of capital markets being kind of the domain of the London Stock Exchange, and how we see the impact of fintechs and institutions within this space, specifically when we look at emerging technologies like DLT. So to give some background, financial services, as an industry, has a lot of heritage. It's been seen to be safe, secure, mostly, and stable, again, mostly. It's also generally been seen to be inefficient, costly, and also highly geographically segmented. Generally speaking, that's been in terms of products and services offered, as well as access to those products and services. In the 2017 into 2018 timeframe, we've seen the industry really begin to pay attention to blockchain and DLT, mostly due to some of the key innovations, which I can kind of go through, which really yield some interesting opportunities for leveraging the technology. Initially, it provides essentially a novel approach to facilitating cross-organizational automation of workflows and activities. Within that, there are efficiency gains and cost savings for businesses when they look to see how they can be applied to activities across front, back, and middle office functions. On the other side, it solves the problem of trust fundamentally within the realm of activities of which a lack of trust would otherwise prevent information sharing specifically. The other innovation, and one of the more interesting aspects of blockchain and DLT that we see, is specifically in and around its ability to digitize value in the form of digital assets. And what that really does is it collapses down into the same automation layer the value with the business functions of which they need to be operated on in a way that is truly novel and also cross-organizational. If we look at the value proposition of this technology, there are two key areas that we see specifically around digital assets and its potential use in the future of capital markets. We see capital raising as being a vital part, and we're starting to see the fruits of that across the landscape. Capital raising is obviously a vital part of both our economy here in the UK, but also across the Arab world and internationally. And it really is very important to the growth and development of countries, both in terms of the commerce and businesses that it empowers and promotes in their ability to serve their customers within their domestic markets. And digital assets can really help radically reduce the costs of capital raising, mainly in around streamlining a lot of the processes that are involved in those steps and bringing together those participants in a way that really reduces a lot of the friction and allows those assets to be brought to market much more efficiently. And what this does is it democratizes access to capital raising, which creates new opportunities for small and medium enterprises. And from a technology perspective, as I said earlier, it does streamline a lot of the processes that are involved in the activities that these organizations can provide, but also in a cross-border way. And that has really interesting opportunities where we see trade and commerce and providing capital between the UK and the Arab world, but also, much more broadly. If we look at some of the trends that we see across the space, we see, generally speaking, fintechs are leading the way in terms of these innovations. There's lots of interesting projects in the UK, the Middle East, the US, and also in Europe that we see, and there's a lot of work going into how do you bring this technology in a productionized and commercialized way to enterprises that can really remain compliant to the necessary regulatory requirements that these businesses inherently have, but also respect some of the high standards of responsibilities with respect to security from a technology standpoint. There are lots of so there's very much a very collaborative approach that we see in terms of how these businesses are engaging with each other, which is very different to the traditional competitive aspects of how these businesses have done so in the past. And DLT or distributed ledger technology, which is a generalization of blockchain as a term. From an adoption perspective of the technology, it really does require this collaboration, and that's been one of the useful and very interesting observations that we've seen. And this has been in the form of consortia, commercial partnerships, joint ventures, as well as acquisitions. From an incumbency perspective, do we see a future where there's, a lot of the larger players and institutions are fully disintermediated? Well, I think disintermediation generally is dependent on the value that of the products and services that these businesses provide. And I think in a digital assets context, much of that value still remains. If you think about the services that clearing houses provide in and around collateralization and clearing and settlement for derivatives, we see that ultimately a lot of that value is still going to be there, whether the assets are in a digital form or in a non-digital form. And similarly with some of the risk management services that are provided by, for example, central clearing houses regulated by the central banks, we believe that a lot of these institutions will still remain. However, their activities will become a lot more cost-effective to offer, and there will be a greater competition in the delivery of these services moving forward. There are lots of risks and challenges with the technology, mainly because of its nascency in terms of the maturity of the technology, but there's a lot of work going into the space across the board in solving a lot of these problems, and it will take time, but eventually it should get there. There are challenges in terms of a lack of regulatory harmonisation and regulatory ambiguity around some of the potential applications that have been proposed around digital assets, but we see these problems being overcome over time. In terms of how we see the future outlook, we believe that we'll see a continued growth of collaboration between fintechs and institutions, and not just domestically but also internationally in terms of crossing borders, and we see that as being very useful to the growth and promotion of access to capital for a much broader suite of entrepreneurs across various markets. And with that, I'll close. Thank you very much for listening.
Thank you, Dotun, for shedding the light on something that is not broadly understood by many of the players. So in a nutshell, and this is for my own sake, blockchain is more or less a database or a ledger technology that has many applications. I think the most famous of which are cryptocurrencies and smart contracts. Something that is being so I'm trying to relate this to the layman's level. I'm sure we'll come to that in the discussions, because I think one of the key questions, and I don't want you to answer now, is that I think blockchain seems to be at the far end of applications, not a very low-hanging fruit despite all the immense implications of it. But we'll come to that in the discussion. So time for the international consultancy, I guess. Anton Ruddenklou, partner and head of digital and innovation financial services at KPMG. Anton is a global co-leader of fintech for KPMG International, a partner and the head of digital and innovation for financial services. In KPMG in the UK, Anton has led and worked on over 150 plus projects across institutions in the fields of regulation, digital, and innovation around global markets.
Thank you.
Thank you.
Good afternoon, everyone, and thank you for having me. It's a pleasure to be here. My parents lived in Cairo for a number of years, and I was made to feel very welcome down there. It's a very warm environment down in Egypt, and so it's good to come back and pay back something to the Arab world, and appreciate all the love you gave my family there. I've been working in financial services for 22 years now. I've been doing the digital, as we would call it now, for roughly about the same time, including helping one of the banks up here on the logo on one of their very first digital projects as they developed new channels. 22 years later, we're still talking roughly about the same thing, which is how do we improve customer service and improve our channels. Secondly, how do we get capital and liquidity to those people who need it quickly? How do organisations change and become more agile? And finally, how do we get the cost-income ratio of large organisations which are tied up with legacy technical debt down somewhat so that they can invest more in modern technologies? And that really is my role at KPMG. I advise 8 large banks around the world in all the regions. I look after Al-Bahar and Ant Financial, and I believe China is our future here in the UK, so we should be embracing our economic and financial dialogue seriously right now. I also look after Google, and we're making interesting things with Google around artificial intelligence and machine learning, not to disrupt financial services back to front or front to back, but to aid financial services in becoming more efficient and getting that supply of liquidity and capital to those who need it. So what I'd like to talk a little bit about today, I appreciate I'm the last speaker, and I'm in between conversation and drinks, so I'll keep it quick. But I'd just like to talk around a few things which I'm very, very passionate about, and we in KPMG have been spending time with the market talking about. First things first, we talk a lot around banks, asset managers and insurers, and our fervent belief is those terms will change over the next 13 years. The age of having vertically integrated universal organisations are going to change, and the reason being we have something called cloud and machine learning and the distributed ledger that's just been talked around. These types of technologies fundamentally open up financial services, whether we have a Payment Services Directive 2 or open banking regulation or any other type of regulation coming through. The technology is there and customers want it. So I can see going forward organisations becoming a lot more horizontal and building adjacencies in what they do. I'll give you a couple of examples here. In the UK, open banking is something that has been mandated. It's been a damp squib so far, hasn't really worked. The reason it hasn't worked is because the banks have thought it's all about them, and actually it's really around customer choice and giving customers of commercial and retail environments what they need. And so what we really need to do going forward is start to think around the lifestyles that people want to lead, the business processes they want to run to equip themselves with capital or to actually run their supply chains, and wrap financial services more clearly around that. And so for that, the secret is data. And we would argue there are 2 things to care about going forward. How we look after data and how we use it and how we deliver value from that, much like the blockchain conversation. And then secondly, how do we ensure that customers of all types are given the best quality service that banking, asset management, insurance can provide. Now, some of the arbiters of that who are doing that well at the moment are probably not banks. They're probably the large hyperscales like the Googles or the Amazons. And the reason being, when you look at those organisations and what they were founded around customer obsession. They were founded around bringing data to those people who need it and making it insight that they can run their lives better with. So fundamentally, we need to start to rethink how we think about data. That would be number 1. 2 is, what are the sexy parts of financial services that we really need to embrace? It's the ones that have the data attached to it. So again, transaction banking, payments, trade finance, securities, FX, these are data rich, and these for us are golden going forward in the industry. Again, looking at where the interesting things are happening in this domain right now, it's not banking and it's not asset management insurance, it's PayPal and eBay and Facebook for merchants and creating amazing algorithms around creditworthiness using payments data and firmographic data or market data. Again, this is really our future for the industry. Where do the fintech fit in here? So we're in the 3rd wave of fintech here in the UK at least. We've got 1,600 or so fintech. We have a large industry. Last year we had around 16 billion in investment into the industry, which is significant. And those fintech that are really starting to thrive now are the ones who have focused very much on cloud, API, data at the centre. And so they're built with a kind of an open standard from day one and can then start to plug into different use cases. And we're looking at really interesting use cases, not just in the channel. So I think one of the mistakes for digital transformation initially was it was about a shiny app with a great user interface. But what we see now is something a little bit more pervasive. So at the back end, talking about regulatory reporting and regulatory supervision, we've got fintech growing up in that space, actually collaborating with the PRA, collaborating with the PBOC in China around actually how to get data science into our regulatory compliance standards. So the regulator will become a data scientist over time, not just the institutions that serve them. And those Excel spreadsheets or returns that we like to put in from finance and risk, they'll disappear. So I think we see more real-time information happening there. Finance is another area which is really in the target for fintech and for the large technology firms. When you think about it, we've built a very complex set of systems that all heap on top of large general ledgers, of which there is very little value. The bean counters can tell you where they've been, they can't tell you where you're going. And I think there we're going to see the fintech really start to inhabit that space and take the data that flows through general ledgers and from external data sources and be able to do some far more interesting things around liquidity, capital management, balance sheet management, and then also helping to drive the business forward a lot more. So my argument would be, again, finance will become data scientists. Regulatory compliance is another area which has been professional in the past. People have exercised judgment, and you have to be quite old to understand all the regulations that come out around the world. The reality is the regulations are running quicker than banks, asset managers and insurers can cope with. So what do we need? We need some support now to actually help provide guidance to those people around compliance and around good custodian and governorship of these organisations. So again, here's another area where fintech can start to actually help, and I'm including in fintech the likes of your Googles and Amazons, where they can start to provide AI decision support for these people to do their jobs. There might be less people going forward. That might be one of the open secrets, but I don't think it's going to be as savage as some people would say. And then linking into product, I mentioned credit before. I think credit going forward to be predictive needs to take transaction data in real time and behavioural data in real time to be really, really meaningful. We shouldn't be relying on credit bureaus to give us old-style data, which is not correct, which actually came from public sources originally. I think that's a fraud, so they should go. And we should just be using other types of data to do that. But credit, trade finance, payments and FX will continue to evolve in this space. China is a really interesting area. It's our largest payments market globally. It inhabits 80% of the payments market now because they started from a slightly different view, which is we've got Tencent, Alibaba and Baidu. Let's try and get financial inclusion working that way, and that's where the party set off. So it's an interesting space. And then back to us as customers. What would we like? We probably want anything that we want from our banks. We probably don't want to be nudged or alerted or notified if we don't want to. So I think the area of mass personalisation will be the next wave for us. I'm sick and tired of getting my HSBC Premier apps sending me messages about 27-year-olds who live in Essex. I'm not quite 27 and I'm not certainly living in Essex. Those are not appropriate messages for me. But I'd certainly like to understand what my daughter, my 14-year-old daughter, is spending at the moment on the high street. That would be quite a good thing. And I'd certainly like to know how much of my mortgage is left and whether I can pay it off quicker or slower. So this notion of actually starting to get a personalised service through the fintech, through our organisations, is going to be the future, I believe. So, final point. We talk a lot about transformation of our industry. I think that is transformational. I would argue the disruption is yet to happen. I would argue we've digitised paper, we've got rid of manual, we've screen-scraped green screens from the 1970s and COBOL or whatever it might be. But the disruption of the business models will be over the next 10 or 15 years. For those people who have been following Facebook in the last couple of weeks with the Libra experiment, you would have seen today there's a cease and desist that's been placed on that experiment. And there are a number of fatal flaws with that model. But here's an interesting idea. One global cryptocurrency to rule them all, a bit like in Lord of the Rings. And certainly that is probably the first of many of these sorts of arguments we're going to have going forward, where we try and tussle with the sovereign and financial stability nature of our financial systems and our currencies, and the fact that technology can make new things quicker and better and faster than maybe the regulators can cope. So it's going to be an interesting time for us to see how that works. But Libra will be an interesting one to see how that continues after its cease and desist, and actually where that goes, particularly as they badge themselves as social good and banking the unbanked, but probably didn't get out of Silicon Valley to go and ask the unbanked what they'd like. So interesting times for the technologists. But hopefully that's been useful. Thank you very much for your time. I'm going to sit back over here.
Okay. Thank you very much, Anton. Okay, because you asked me to be provocative with you today, you're probably the only international consultant who hasn't talked about sustainable development goals. Mm-hmm. And we're going to make you pay £5 for that. Okay. So I need to relate this to the previous panels. There was specifically the previous two panels. There was specifically a lot of talk about gender equality, about agriculture, about the human, about water security, and about, what was the last one? Education. education. So the question is, are you going to tell your bank clients how to sell more to the same clients, or are you going to help them open up to broader masses of clients who did not have access to financing and other services in the past?
Yeah, so really good questions, and this is an area where I think it's not about the technology, it's actually about humanity and empathy and doing the right thing for our communities. First thing I'd say, female entrepreneurs and bringing out more women in our industry, absolutely we've got to do that. Technology is a male bastion, so is banking. And so, it's two headwinds for women in our industry. But there are some green shoots. So we did a piece of research recently on the UK fintech here and how profitable they are. The most profitable fintech are the ones run by women. Honestly, this is a piece of statistical evidence, and they make 133% more profit than their male counterparts-led businesses. Now, there's only 8% of the fintech that are run by women. One of those is Starling Bank, which is run by a lady called Dotun, who is awesome. Most of her management team are women more than men. Most of her clients, strangely enough, are women more than men. And I think we have to reflect the communities we serve a lot better than what we're doing right now. I'm white and male, so here I am being a bit of a hypocrite, I suppose, but we've got to change the way we work. That's one. Secondly, on the inclusion element, over here in the UK there's a thing called The Big Issue, which is a magazine that people sell when they're trying to get themselves out of living on the street. There's not a sovereign wealth, there's a wealth fund that sits next to that called The Big Exchange. They brought in M-Pesa technology from Africa. And they're brought over also the very, very cheap mobile phones that are placed over in Africa as well, in Nigeria. And the idea is to bring the bottom 2.5 million people in our country who can't afford this sort of stuff into the economy and give them something which is, one, going to manage anything around their social care, and secondly, help them save, trade, do whatever they need to. For me, that's a really, really good way of actually using innovation to bring people into communities. The people we're going to leave behind on the digital transformation will be the poorest people because they can't afford the iPhone X, right? And we have to do something about that. Third one on green. So green and digital go really well together, particularly with your stuff on blockchain. Because one, we want to know whether the provenance of the goods that we're buying is good or bad. A good example is Gap, the American clothing manufacturer. They're working with South African producers at the moment on ethically sourced cotton to ensure the provenance right through the supply chain to us that buy it. Now, the good news of that is there's so much friction or paperwork in the process of supply chain. If we can eliminate that through a token or blockchain, we'd actually give more money back to the producers. And for those people who are close to farming or horticulture, that's a tough life. So I think from a green perspective, the more we can pay back, the better.
Yeah, I see the organizers waving with their hands. Okay, we'll open the floor for 3 questions, I guess, like every... sir, please, could you present yourself?
Al-Bahar, KPMG Financial Group. A question to Mrs. Shaikha Al-Bahar. From your observation in the GCC market, do you think investing in technology is a better option than merging with other banks? And speaking of that, do you think the Kuwaiti market is overbanked? Is it now a good time to merge? That's for you. For Mr. Alhajeri, with the inclusion of MSCI to the Kuwaiti stock market, could you tell us what's the impact on the foreign investments?
Okay. Shall we take the second question, then the lady over there? Could you present yourself, please? The gentleman, please. He was promised. Yeah.
My name is Kalim. I'm from the Omani delegation here. It was very interesting, and I worked in the banking industry in fintech for almost 20 years of my life. In the 80s, the trend was using the plastic cards came out, and all the banks were giving plastic cards with MagStripe, and then it became dangerous, too much fraud. They added a chip on it in the 90s, and they mandated all the banks to spend a lot of money to add a chip to make it more secure. After, in 2000, they started with contactless, so you pay with just presenting your card, and that became also risky, so they limited it to smaller amounts. And now we realize that with fintech evolving and more web payments coming in place. So PayPal, Google Pay, Apple Pay came forward. However, the Western regions were more evolved, they're more regulated, and the banks are more regulated. The central banks are more open to change, so they implemented, so the acceptance was there, issuance was there, the business was growing. But if you just go a little bit to the east side, the business in the Middle East has been very shy. The reason is probably the central banks are quite shy to take a risk, and that's why the e-commerce transactions are not great. And then cybersecurity is another issue that everybody highlighted. Now, I've got a few questions now here. One to the bankers. The bankers are not investing any more money in developing standards. So now all the banks are going to issue e-wallets. So everyone will see have e-wallets, and you can't use these wallets. They're just spending money. So the question is to the KPMG, to Anton, to Dotun. Where do you see why don't you create some standard that everybody can follow, like Visa, MasterCard, Diners, Amex? There are standards. So create one for e-commerce, and standard where banks can just participate. Okay. So your payments are through, and then your disputes are managed. So just highlight a bit on where the world is going and why there is no standard. And with the cryptocurrencies are coming on board, the fintech is quite over.
Thank you very much. Thank you very much. We'll move to the lady. I think that will be the last question, unless the organizers allow us. Okay, you don't allow. All right, fine.
The question is for the blockchain architect. I have been so enthusiastic about blockchain. I've just been to Barcelona for 2 days, and I made a point of visiting this professor in Barcelona who teaches blockchain. And this is what he said to me. Blockchain is used not for actual money management. It's not stable. It's in fact very risky. And it can only be used when there is nobody who could deliver on the other side. So what is this thing about blockchain? So much hype. Is it a hype or what is it?
Thank you very much. Can I ask to keep it short for everyone? Yeah, I think we'll start with Shaikha, please.
We're basically talking about e-commerce. I mean, it's a strong payment gateway or channel. The size of the e-commerce worldwide 2019 around $3 trillion, and the expectation that this will grow up to maybe to $6 trillion in 2022. Kuwait as well. I mean, e-commerce is very active as a payment channel, and banks are heavily investing in technology. Now, the challenge is the digital bank and the digital lab, which is basically the intention and the rule for end-to-end digital banking. GCC is very advanced in terms of technology in comparison to the rest of the Arab world. And I believe that unless you invest in technology, as I mentioned, you won't be able to survive. The youth, as we said, they are tech savvy and they are taking over. And it's the only way to thrive. It's the only way to grow your clientele base. It's the only way to grow your business as well as your bottom line. I don't know if I answer your questions or...
In a way, yes. But the banking system in Kuwait, is it overbanked?
Well, I mean, no. We don't have, that too many banks in Kuwait. The market is not crowded, and with the change in the industry, definitely the conventional banking will disappear. And as I mentioned, you have to be in digital banking. And when we talk about digital banking, it's not just the local market, it's the whole world. I mean, For instance, Kuwait, MBK is a regional bank, and when we come up with certain solutions and innovations, is just to offer the service to our clients worldwide. As I mentioned, Kuwait, KSA, Iraq, Egypt, and these are growth markets. So the market is not anymore your own market. It's the whole world, and the global is your market. So, Kuwait is not crowded in terms of banks, and I believe Central Bank is very open for new licenses in Kuwait.
Thank you, Shaikha. I think we'll move to Dotun on the blockchain question.
So just to try to paraphrase, is your question what makes blockchain so hard to understand in terms of how do you apply it, or can you please clarify?
I said it was too risky. It can be too
stable.
Yeah.
Too risky. Okay.
Yeah.
So in terms of stability, I think stability is a concern when you look at cryptocurrencies, for example. If you look at Bitcoin and some of the other cryptocurrencies that are available in the marketplace, they are very price volatile, and the reason for that fundamentally is that their value is not intrinsic. It's based entirely on a fairly relative speculative view that these things may be valuable at some point in the future. I think ultimately what's interesting for a lot of financial markets participants and institutions is more of the technology and the underlying capabilities that it provides. And really it's when you get down to activities where you have multiple participants engaging across the value chain, and if there are opportunities whereby through collaboration, but within leveraging a means to manage the risk of sharing data, blockchain can really solve for the trustless element of it. And I think that's really where it gets very interesting. And if you think about digital assets being a very good example of that. So digital assets in the sense of potentially a digitized version of a physical asset, or it could be a digitized version of it, let's say a financial instrument like a security or a stock. Definitely, there are still risks. If you think about the custody side, obviously, rather than having a business with a trust relationship managing those assets, you now have to rely on public and private keys. But I would say, generally, from an infrastructure management perspective, the same institutions, so custodians, for example, may just change or reorientate the role that they play, and maybe they are responsible for managing these keys. And there are technology solutions to help solve for some of the InfoSec risks. So, for example, hardware security modules can provide some degree of security against some of those cybersecurity risks.
Thank you very much. We'll move to Anton to the last question.
Yeah, sure. And I'm going to be at dinner tonight, so everyone will catch up for further drinks. Just ask. Just on, I think you were asking about security and IDMV. I didn't.
Standardization, global standards.
Yeah.
Acceptance.
Yes. Yeah.
Banks have diffused urbanization, they don't want it. They're not following any standard. So therefore, there's no acceptance of their own transaction as well.
Yeah, so it's standardisation of protocols and policies around the world, roughly for security and risk management, and I think that's a really hard one to crack, unfortunately. Looking at all of our markets, we all have sovereign interest in what we're trying to do. We all think we're doing better than the others. We also don't have sovereign identity schemes that are rolled out around the world, and then also the biometrics that we're using are constantly being hacked. So one of the sort of dirty secrets about going digital is that if we're building software, the bad people are building software that's better than our software. So we're an arms race on that front, unfortunately.
Can I ask to finish up in the corridor, please? Yeah, I have to. I cannot. If I may, I'll just answer on the MSCI upgrade of Kuwait. I think it's a very exciting move. It is not the end of the journey, though. Most of the GCC countries are engaged in attracting capital investment, sometimes direct investment, sometimes for portfolio money. I think the real interest is not because the Gulf needs the liquidity, but it's to improve the liquidity. I said it's not the end of the journey because on the sustainability side, we have a very promising and deep mutual fund industry that is waiting to collaborate with the international investors with whom we used to invest in the past, and we're excited now to see them investing in our economy. I think it's a very exciting move. Thank you.